Good afternoon, ladies and gentlemen. My name is Michalis, and I'm one of the market analysts here at HF Markets. A lot of you probably already know me. I've been in the market for 10 years. I've got two licenses as a financial advisor. I've also worked as an independent financial advisor as well. Welcome, everybody, to today's live analysis webinar where we're going to be focusing, yes, on one specific country, yes, on one specific index and currency. But of course, today is a day where a lot of assets will have a lot of volatility for different reasons. So, of course, we're not solely only going to be focusing on the British pound, on the cable, on the FTSE 100, but we also are going to focus a lot on other assets which are going to have a lot of volatility. For example, US indices as well as European indices are going to have a lot of volatility, potentially even more volatility than we will see on the FTSE 100, very simply because today it is like the market is trading for 2 days, because yesterday the US market was closed because of the bank holiday, but of course today it's open. So it's like there's twice as much volatility as we would traditionally see within the market. So we have to take that into consideration, of course. Now, as part of today's webinar, like I said, we are going to be focusing on a lot of different assets. But what is the aim of today's webinar? The aim of today's webinar is for you to be able to see signals, see indications, look at targets, look at potential entry points, and look at potentially where a lot of professional traders may attempt to put their stop losses. So this is what we want to achieve as part of today's analysis, because it's not a standard webinar which is purely for educational purposes. We are here to look at signals. We're here to look at where potentially the market is going to develop, within what period of time, and so on and so forth. So today's live stream, it is unique because it's not purely here with a presentation. We are here for business. We are here to see what kind of indications we are seeing within the market, and of course we will look at the multiple assets, because like I said, US assets will have a lot of volatility today because it's like they're trading for 2 days. So even though today's event is related to the Bank of England, is related to the UK, so the FTSE 100 and the British pound, it will have a ripple effect throughout the whole financial trading market. And like I said, volatility in US assets will definitely also see a lot of volatility because it was a bank holiday yesterday. But this is something, for example, that we've already seen as well. So, for example, I can give you proof of that. If we look at, for example, today's Asian session, and we're looking at the US 100, so we're looking at the NASDAQ. Look at the volatility here, ladies and gentlemen. The volatility here, if we go to a 1 hour time frame, so people have a better understanding. Look at the volatility yesterday. Look at the volatility the day before in the Asian session, so this area here. Look at the Asian session on Monday. You can see it's very sideways, not a lot of volatility. Look at today, so much volatility, a large price gap, a lot of volatility during the Asian session and as part of the European session. This is because, of course, we are trading as though it's for two trading sessions. So we're seeing untraditionally high levels of volatility. So yes, we are going to look at the pound. Yes, we are going to look at the FTSE 100. We are going to look at targets and signals and indications, and we'll analyze the market together. But, ladies and gentlemen, we will look at other assets as well. I've got a question here from an individual. Let's go back to a 2 hour time frame setup. This individual is saying, will the euro against the US dollar increase or decrease in value? Now, I'll look at this in more detail, ladies and gentlemen, because we're about to have the announcement. Without a doubt, there is a correlation between the British pound and the euro. It's not one of the well-known correlations, such as the US dollar against gold, or the gold and the Australian dollar, or oil and the CAD. But there is definitely a correlation there between the cable, and the Euro USD. So the announcement after the Bank of England's rate decision. Also, we will have the monetary policy statement. Later on this afternoon, we will have the press conference. And in addition to this, we will also have the monetary policy votes as well. Now, that can have a very big effect on the market. Most probably going to have the biggest effect, actually. So, of course, there's going to be a change in volatility after that announcement. But at the moment, ladies and gentlemen, based on this current setup, we are somewhere in between a neutral to a sell signal. This is at the moment. Of course, this is something we will have to relook at and renew as soon as the announcement has been made. Now, why is that? Because these two lines here, they're a simple moving average and an exponential moving average. Now, the green, ladies and gentlemen, is a 100 bar simple moving average. The red is a 75 bar exponential moving average. These are very well known sentiment lines. They're exchange price sentiment lines. So if the price is trading below, which at the moment it 100% is trading below, it's an indication that sellers are controlling the market. It doesn't necessarily mean that it's only going to move downwards. There's still volatility, but it's an indication that there's a slight bias towards the downward direction. And if we're also looking at the RSI is trading also below 50, so that's also an indication of downward price movement. But, ladies and gentlemen, we're currently, if we look at the latest candlestick here, the latest candlestick is a bullish candlestick. So at the moment, there's no signals to sell this currency based on this setup at the moment. But, of course, we're about to get the announcement. The announcement will take place in 2.5 minutes. That's something which potentially is going to change. We've broken down to a lower low. So, for example, if we look here, ladies and gentlemen, we have a low. And if we look, the latest low is now at a lower low. So we've had two lower lows and we've had two higher lower highs as well. So there's possibility there. We're trading below the 100, we're trading below the 75, and we're trading below the 50 on the RSI. So there's potential there. But we need that signal to be renewed because at the moment we're in a bullish candlestick at the moment. So that's to answer that question, ladies and gentlemen, but we'll come back to it because the Euro USD has actually got the lowest spread. The spread on the Euro USD, because it's the most traded currency worldwide, is extremely low. So there's a lot of advantages to that. Yes, it's also very low on the cable, so the pound against the US dollar as well. Also, keep in mind, ladies and gentlemen, that you have an option to trade the Euro USD, the pound US dollar, and also most currency pairs without no swap fees. So there's only two types of spread of fees that we charge on most accounts, which include the spread and the swap. So if you get a zero swap account, you can actually trade the Euro USD with no swaps and overnight fees at all. So, ladies and gentlemen, what I want to say is, before the announcement is made by the Bank of England for the British pound, is that because of the upcoming elections, there may be less volatility than there is traditionally when looking at other central bank releases. This is a possibility. Why? Because the Bank of England will be very careful not to make any adjustments before the UK elections. So that's something that we have to keep into consideration. If it wasn't for the elections, potentially they may have looked at adjusting interest rates. The ECB has already done so. The Swiss National Bank has already done so this morning. So that could have been a potential outcome. But because of the elections, we're not likely to see any major adjustments or forward guidance. For example, if I go, ladies and gentlemen, to the US dollar against the Swiss franc, look at the volatility today. Look at this, ladies and gentlemen. This is a lot of volatility. This is a spike within an hour of 0.82%. Now, we're going to compare that now with the British pound against the US dollar. So if we go to Google, ladies and gentlemen, we go and type in HF calendar, we of course can look at the announcement. So let's wait for this to load. Let's go to today. Let's very quickly refresh actually, because the announcement has just been made. Let's see if we've had any adjustments. The expectations at the moment is for there not to have been any adjustments at all. Let's filter for today, ladies and gentlemen. So here we go. We've had no adjustments. We've had no changes in the UK's monetary policy vote. So the amount of votes, ladies and gentlemen, was expected to be two, the same the way it was during the last announcement, and also interest rate pauses was expected to come in as seven. As it previously was. So everything came in, like I said, and this is why these webinars are important, because you get somebody uh, communicating and commentating with 10 years experience, a licensed financial advisor, a market analyst. And before the announcement has even been made, very clearly, we pointed out that interest rates will not be changed. The votes are not likely to change. And the statement, to be honest, is not going to give any clear forward guidance. Why? Because we're about to have elections in the UK. And if we're going to have elections in the UK, they don't want to influence that. Now, what did we say was the indications? Okay, don't forget the latest candlestick. We were on this candlestick here. So the second to last candlestick. I actually put a red line, ladies and gentlemen. This was the candlestick here. We said that the indication at the moment was for the British pound to decrease in value against the US dollar. Now, we said it was because of a couple of things. Number one, because of upcoming elections. Number two, because nothing major was going to happen with the Bank of England. We're below the 75 bar exponential moving average. We're below the 100 bar simple moving average. And we're also below on the RSI. The only thing we said is we wanted to go from a bullish candlestick to a bearish candlestick. We said it was going to decline. Since we spoke, ladies and gentlemen, the price in just approximately 6 minutes has declined by 0.20%. So you can see exactly why we're here to provide signals. Now, what is the major target? What is it, people that are looking to speculate decline, what area do they need to be cautious about? The area they need to be cautious about is this level here. Let's actually change the color, ladies and gentlemen, so people can more clearly see it. And let's actually make it slightly bolder. There we go. So based, ladies and gentlemen, on price action and support and resistance, we can clearly see here that it formed a double bottom, which is known to be a slightly stronger support level than just an area where the price changes direction. In addition to this, if we go down to this level, ladies and gentlemen, we're definitely going to go very close to these previous areas of support here on the RSI, which is most probably about the area, ladies and gentlemen, of approximately 35. So this is also another point. So you can see here, maybe 35 is too high. Let's try 30. There we go. So 30, you can see here, is definitely an area where the price found support as well. So there was a change of sentiment amongst investors at that point. Now, if we're going to decline to this level here, we can see we're very close to that 30 level. Most likely we will reach that level again if we trade in, ladies and gentlemen, and speculate in that decline. So at the moment, we can see the signal, like we've stated, indicates a decline. Now, people may say, for those people that didn't listen before the announcement, which was absolutely fine, or people that listened, and as soon as the announcement was made and it turned into a bearish candlestick, they traded, there will be 0.20% in profit at the moment. Maybe some people have recently joined. Maybe they didn't hear that. They weren't on time for that. So how did they trade? How did they get an entry now that that time and that announcement has been made? So this is the next thing I want to look at, ladies and gentlemen. And to look at that, I'm actually going to go to a 5-minute time frame. And I'm going to go to the British pound against the US dollar again. Here we go. And what we can actually see is that it's retracing. Now, people may say, why is it retracing? That's an issue. People that were actually selling all the way up here, ladies and gentlemen, it's not an issue because probably they've hit their take profits already. They're probably already out of the market. So for those individuals that want to start to enter now, keep in mind that the retracement upwards is 100% normal. This is volatility. Yes, I definitely will look at the British pound against the Swiss franc. That's a very interesting pair. The only thing I would say to be cautious about, ladies and gentlemen, within regards to the British pound against the Swiss franc, is when you look at a currency, you have to analyze the currency. You know, some people say it's one asset, so you need to analyze it as one asset. Some people say it's two assets. You need to, because it's two currency, you need to analyze both currencies individually. The correct answer, ladies and gentlemen, is when you're analyzing a currency pair, it's three assets that you are analyzing. You are analyzing number one, the currency pair. You are analyzing number two, each currency individually. So, for example, the British pound. And number three, the Swiss franc. So it's three different assets that you are analyzing. Now, where is the difficulty that a lot of beginners traders make a bad decision on? A lot of traders, especially professional traders, they look at two currencies, and ideally they want one currency to be increasing in value against the whole of the market, not only against that currency, but against the whole of the market, and they want the other currency to be performing badly again against the whole of the currency. So that way there's strong volatility, there's a clear direction, there's less likelihood of fundamental aspects causing a change in trend, and also because there's not going to be a conflict. What we don't want to see is a conflict. Now, at the moment, the Swiss franc, of course, came under a lot of pressure because they cut interest rates, and a lot of people thought that they wouldn't, even though we have said that they would. So, because of that, ladies and gentlemen, it's a scenario where the Swiss franc is declining, and as we can see on our charts, the British pound is also declining. So, ladies and gentlemen, there's difficulty with the Swiss franc against the British pound. We will look at it, but there's benefits to actually looking at a currency uh, for those individuals. Now, of course, we're not going to say what direction for you to trade. You have full control over your trades. But what a lot of individuals do is they'll look, if they want to speculate that a currency is going to decline, they will look, ladies and gentlemen, at the best performing currency. So, the best performing currency, for example, of the day and of the week, for example. So, today, the best performing currency, ladies and gentlemen, is the Australian dollar and the US dollar. So this has more benefits to speculate the decline of the British pound. There's more benefits to doing so when you're looking at those two currencies. If you want the British pound to increase in value, and that's what you want to speculate, then you actually can do so, ladies and gentlemen, very simply by taking into consideration the weakest performing currencies, which is, like I said, the Swiss franc and also the Japanese yen. So that's again something that we can take into consideration. So at the moment, before moving on to another currency, for those individuals that want a further signal, they've had that first signal that we spoke about at the very beginning, they want a further signal. Maybe they want to scale in and scale out. Maybe it's already hit their take profit and they want to now look at the next trade. Now, there's options. Now, for those individuals that would rather trade earlier to try and trade a larger portion of the impulse wave, then they can use the Fibonacci retracement. So basically what's happening is this is retracing upwards. If I actually go onto a 1 minute chart, you'll get a better view of how it's retracing upwards. So for example, here, we can see it's moving upwards. Now, what you can actually see is the 61.8. That is the major level, ladies and gentlemen, the 61.8. Now, normally just below this level, so around here, it's at that level where the market says there's enough volatility back in the favor of the trend. We can see it's a downward trend at the moment, but it's just retracing upwards. And it is still a retracement unless it's going to increase above this level. If it increases above this level, then it actually becomes a correction. But ladies and gentlemen, we're drawing the Fibonacci retracement. We're looking at the 61.8, and we're drawing a red line just below that. So approximately at the 65 point. If it declines and breaks below this level, this is a signal, ladies and gentlemen. So let me actually take out the Fibonacci, because we've already used the Fibonacci and I've drawn my line there. If it declines, ladies and gentlemen, below this level, that is a potential signal that the price is potentially going to decline. Further, like we stated at 5 to 3, that it was going to decline. It's declined. Probably hit most people's take profit. So a further decline, potentially indication is there. Another option is, of course, for you to look at the breakout point, which is at a lower point. So again, depends if people want to enter earlier, people want to enter later. That's a big factor. The only thing we don't want to see, if we want to speculate a further decline, is of course that we're not going to see higher highs and higher lows. So now it's retracing back into our favor. But then if it goes up to here, then we actually have a higher high and higher low. But at the moment, it's following exactly the same pattern of what we're referring to. Now, people also said for me to look at the euro against the US dollar, and they also said the pound against the Swiss franc. So let's go to the euro USD. If we're looking at the euro USD at the moment is holding on strong. It's still at that neutral level. We haven't seen a change, ladies and gentlemen. Why haven't we seen a change? Because we're looking at bullish candlesticks, but we can see here we've got lower lows, we've got lower highs, we're trading below our sentiment lines, and we're trading below the 50. So we have conflicting signals at the moment. Now, the next thing people can say is, okay, signals are conflicting, but when are we going to see them not conflict? So when are we going to get a signal that the price is actually instead going to decline? Now, in order to obtain that, ladies and gentlemen, we've already seen on the larger time frames, we've got lower lows and lower highs. In order to obtain a signal, again, we can very simply just draw a Fibonacci level. So we've drawn a Fibonacci level again based on the high and the low of the retracement. If the price declines just below the 61.8, so approximately at this level here, is at that point that we have a signal that the price potentially is going to decline further and create a lower low and another lower high. The only thing where we need to be cautious that if it continues to increase and it actually breaks above this level here, for example, then it's a potential issue. And that way, we're still remaining within the neutral area, even if we're going to get a decline thereafter. Why? Because we've gone from a retracement to actually a correction, and we would have actually at that point clearly traded above our 100 bar sentimental line. So that's something people can take into consideration. But at the moment, the candlesticks turn bearish. We're seeing a slight decline here. Also, we're looking at divergence on the stochastic oscillator. So this is another indication that it may lose momentum, upwards momentum, because we can see we got a high, a lower high, and then a lower high as well. So we've got lower highs there. Whereas here, we've got higher highs. So we can see a very different scenario there, ladies and gentlemen. But like I said, we want to see momentum downwards first before using that as an indication that the price is going to decline. I've got some people here who are saying, can we look at stocks as well? Yes, we will look at stocks. Let's look at one more currency pair because people requested it, and then we can look thereafter at stocks. So here, ladies and gentlemen, we can see, and this is exactly what I was referring to in terms of the British pound against the Swiss franc. We're looking at two currencies that at the moment, two currencies that are declining in value. So there's difficulty there. Why is there difficulty? Because they're conflicting with each other. Whereas if we're looking at the Swiss franc, like we said, the Swiss franc is the weakest performing, and the Australian dollar is the strongest performing. So if we go then now to, if we go the Australian dollar against the Swiss franc, and we look at this price action compared to the price action of the strongest versus the weakest of the day, we're going to be able to see a very look at the difference here, ladies and gentlemen. A very big difference between the two. A lot more momentum, very clear signals. We can see here that we're very clearly on the upper side of the RSI, very clearly above the sentiment lines. We've got a very clear higher low here. We've got four higher highs as well. So that's definitely an area that indicates that, you know, clear indications that buyers are controlling the market. The only thing we need to be cautious about is so much price movement has already been made. So of course we need to be cautious about that. But you can see the difference between the two. If you're going to take something away from today, that's definitely something to take into consideration. For those individuals that do want to trade this, though, of course, they're more than welcome to. We can see the signals there for potential further increase in value. If we're looking at a 5 minute time frame, ladies and gentlemen, we can see a sideways price range. It's understandable very clearly because we've seen so much volatility. The price range is between here. The Bollinger Band is trying to increase further upwards. If it does increase further upwards and we break above the Bollinger Band, even if better if we break above the price range, and we still remain above the 150 moving average here, above and see upper lines on the MACD. We remain high on the stochastic oscillator. We remain high on the RSI as well. Then, we've got signals there that potentially the price at some point can regain momentum. But like I said, so far today, there's been so much momentum on this currency. So you need to be cautious about that. Now, individuals, like I said, stated to asked on the chat. And by the way, if you've got questions, feel free to ask on the chat. We've got a lot of individuals who asked about looking at currencies. Looking at stocks. And more specifically, a lot of people here are saying indices. The thing I want to mention about indices, by the way, ladies and gentlemen, let's go back to this setup and then we'll go to a smaller time frame. The one thing I want to mention about indices is that we're about to have the weekly unemployment change. That can create a lot of volatility. That is more important than it traditionally is. Why? Because for 2 weeks it's coming higher than expected. And last week it was the highest that we have seen in many, many months. So there's a stronger importance to that at the moment. That will be released, ladies and gentlemen, in 1 hour and 10 minutes. And that can create a lot of volatility. Now, if we're looking at the Nasdaq, we've got clear indications left, right, and center that the price is going to increase in value. So I'm not giving too much importance to trend and momentum-based indicators. Why? Because they're all going to point to the same thing, that the price is going to increase in value. What I will say, though, is we actually have divergence on the RSI. It's only slight because of the very strong upward price movement. So that is a slight indication for concern that the price, may decline. The other thing is, it's the first time that the Nasdaq has increased in value for 9 consecutive days this year. So this year, the Nasdaq has never, in the past almost 7 months, ever increased in value for 9 consecutive days. So that's something unusual. So maybe the decline is not going to come today. Maybe it will come tomorrow. Maybe it will come later on. But we need to be slightly cautious because the price is, overbought. People, of course, are going to want to start to cash in. There's a lot of upward volatility, ladies and gentlemen. So is the price, at least in the short term, overbought? Now, it doesn't mean the price is going to change a whole new trend and it's going to go back down to 17,000. No, but it can retrace. So you need to be cautious about that because a lot of people just very simply look at the chart and will buy and not take anything else into consideration, whereas you should. Now, if we go back to today, ladies and gentlemen, what you'll notice is we renewed our highs and it retraced back downwards. We can do the same thing, ladies and gentlemen, that we did previously, and that is, we can look at the high and we can look at the low, and we can draw a Fibonacci to use that as breakout points again. So, for example, like I said, just above the 61.8, so approximately here, we can potentially use that as indications of upward price movement. But on the 5 minute, there's no clear indications of that. We've got a lower low, sorry, we've got a lower high. We don't have lower lows, but we have consecutive lows. So no clear indication there. A lot of people, I think, are waiting for the release of the weekly unemployment change, and also they're slightly cautious, and sentiment is changing towards a very, very high price. It's like, for example, if I come to you and say, buy this apple for $1, you buy it. Then I say, buy it for $1.50, you still buy it. If I keep increasing the price, at one point you're going to say, no, I don't want to buy it. So the same thing applies to when trading indices. You've got to look at the intrinsic value of the asset. Now, before we start looking at technical analysis, I also want to look at more aspects of the market to get an understanding of the true value, the intrinsic value of the Nasdaq. Now, one thing I want to say, ladies and gentlemen, is let's look at sentiment indicators. Now, one sentiment indicator is the VIX. So we can see the VIX here, ladies and gentlemen. So the VIX today is trading 0.67% lower. So that's an indication, ladies and gentlemen, that the sentiment within the market is high. We can also see most bars here are green. All stocks are increasing in value. So we've got the Euro Stocks 50, we've got the Nasdaq, we've got the DAX, we've got the S&P 500, we've got the Russell 2000, which is a riskier index, the Nikkei 225, the Dow Jones. Stocks are increasing in value. So we can see a strong bullish sentiment there, number one. Number two, the VIX, the lower it is, the stronger sentiment it shows within the market and more confidence, because it's a sentiment indicator, a sentiment index. So that's also indicating a strong stock market. Now, the next thing that we can also do is look at the Nasdaq's high-low indicator. So Nasdaq high-low index. Now, this, ladies and gentlemen, will start to move when the market opens. What does this basically do? This is comparing the amount of stocks at a 52-week high and the amounts of stocks at a 52-week low within the Nasdaq. Now, if it's above 50, it indicates that the price and sentiment towards the Nasdaq is strong. So at the moment, it's above 50. The only thing I would say, though, is over the past month, it's declined. It was almost at 65. So the fact that we're below 60 now is a slight concern. Only slight, though. If this continues to decline, and especially if it's going to decline below 50, then that becomes a real concern. At the moment, though, the price of the index is above 50. In the previous day, we can see here increased by 0.61%. So it's a strong positive trend at the moment. So this is in line with strong sentiment, bullish sentiment within the market like we saw here. So let's move on. Let's look at the US 10-year bond yield. Now, this is something which is a slight concern. What is the concern? When bond yields increase in value, it indicates two things. Number one, when bond yields increase, it indicates that there's a low sentiment and demand towards safe haven assets, which is the bond market. So the fact that it's high indicates less people are interested in bonds which are ultra safe. So that can be deemed as a positive. But the fact that yields are higher is actually negative for the stock market because it increases the cost of debt and that can lower the cost. That can lower the consumer demand within the market. So that is something that we need to take into consideration. So at the moment, that's kind of 50-50 at the moment, but a slight tilt towards potential pressure on the stock market. But ladies and gentlemen, at the moment, it's very clearly indicating strong sentiment towards the Nasdaq. So there's no clear indications there that there's a reason for the Nasdaq to decline. The only thing is that, like I said, it never has increased for 9 consecutive, not 9 days, but 9 consecutive days straight. That's something that's not previously happened this year so far. So, are people just changing the pricing of the asset and they're happy and comfortable to do so? Or is it suddenly gone too high too fast and the price is high enough to actually say to people, you know what, I've made a lot of money in a very short period of time. Let's sell. If it declines, we can enter at a better price. Or another issue is that it's so high that people say, you know what, I'm not going to buy because it's a very high price. So that's something we need to take into consideration. Something that has helped that 9 days of consecutive increases is very clearly, like I said, um, I actually said it in the previous live session, is Nvidia stock split. Nvidia stock split took the price from 1,200 to 120 something dollars. So of course that really helps avoid that psychological pricing that somebody says that's too expensive, I'm not going to buy. So that helped, that upward spur. Now, in order to get more momentum, um, how much momentum in order to get a buy signal, ladies and gentlemen? I wouldn't actually put the Fibonacci on the low. I'd put it at this level because that seems to be a more important level. Very simply, above the 61.8 here. That's a lot of momentum and enough momentum to trigger indications of upward price movement. The only other thing that you can do if you want to do something slightly different is you can trade the breakout here. Either way, we will be trading above the 100 SMA, and if we get that momentum, we'll form a bullish crossover. What's a bullish crossover? We can see a bullish crossover here. We can see also a bullish crossover here. If we go back slightly further, we'll definitely be able to see more bullish crossovers. This is a bullish crossover here as well. That's a bullish crossover over here as well. So we've had 4 bullish crossovers in today's market. 3 out of the 4 currently are in a profit. Of course, some people may have exited these and it would have hit take profits so far anyway. But so far, we can see signals indicate upward price movement, but the price is very high and that could really change the scenario, at least temporarily. It may not be forever, but at least temporary. What do people need to be cautious about? Like I said, when looking at today and the upcoming US session, because the US session is going to open in exactly 1 hour, what you need to be cautious about, ladies and gentlemen, is the weekly I said unemployment claims. It's also known as weekly jobless claims. Like I said, actually, we can't see it on our calendar, but if I go to Forex Factory and I go to calendar and we go to the unemployment claims, here we go. We can see it's red, so it's saying that it's extremely important. Previous week, it was higher than expected. It's red here, so that's a negative. It was negative here as well. Both weeks were higher than what we previously were seeing, and 242 is not something that we have seen in a very long time. So you can see, if we look at the whole of 2024, we've never had a figure as high as 242,000. So if it comes in more than 135, or if it comes in at 100 and more than 100 and 242, that can put a lot of strain on 2 things. There's 2 things people can view it. Number one, it could be viewed as, the stock market, the employment market and sector is not as strong as we previously thought. There's cracks there, it's cracking. Also, keep in mind that financial advisors deem employment as the most lagging of all indicators. A very well-known financial advisor actually said if employment declines, it's too late because it's the last thing that will decline. Okay, so that's something we need to take into consideration. If that starts to crack, and that is higher than what we previously saw, and higher than what we were expecting today, it can create a less appetite towards riskier assets. So, of course, that can affect the stock market, especially while the stock market is so expensive. If the stock market was very low, it may not cause such a big issue. It may actually be deemed as positive. Why? Because that will pressure the Federal Reserve and the Federal Open Market Committee to prompt them to adjust interest rates earlier. So rather than adjusting in October, which is almost certain, sorry, November, which is almost certain, a lot of people, the majority of people think also September. It won't be that scenario, it will actually be July. So that is not priced within the market in any way, shape, or form. So that definitely can have a very strong effect on the US dollar and the stock market. So there's two ways that that can swing in regards to that. Either way, though, the main thing, it will create a lot of volatility, and that creates chances for us as well, and opportunity. So I've got somebody here that says, if the Nasdaq declines, where can we aim for? Now, there's a few things that we can aim for. I'll give people three alternatives. Number one, somebody can aim for the latest support level. They can aim for the support level before that. The lower support level, I think, is too far away for short-term traders, unless it's not a personal opinion, it's a fact, because that's very far away and you can't reach it in such a short period of time. If you're looking at a different approach and a different methodology, by all means, that can be a great scenario. Um, in regards to the decline, though, a lot of people will also look to for the price to go down to the sentiment line. Of course, the sentiment line will keep on increasing, so most likely it will be slightly higher. Probably will be around here, but they will base the target if the price is going to decline on the sentiment line. If that sentiment line is reached, that's a first target. Of course, if it keeps declining, the target will change. Otherwise, alternatively, ladies and gentlemen, we can look at this support level here, which is the most recent support level that we have seen. Now, I'm not going to look at the S&P 500, but I will look at the Dow Jones because it's a very different scenario. Somebody mentioned to me earlier about mean reversion. People that want to trade based on trend, there's more benefits to the Nasdaq. People that want to trade based on mean reversion, there's more benefits to the Dow Jones. It's understandable because it's more of a mitigated and a different, stocks from different sectors type of an index. It includes a portion of growth stocks, it includes a portion of defensive stocks, it includes a portion of high dividend yielding stocks as well. So it's very different. So we can see a very clear, more up-down scenario. Now, in regards to the Dow Jones, ladies and gentlemen, the price is clearly seeing indications that that buyers are controlling the market, but there is an indication there that the price is overbought. So in regards to that, we can look at the potentially if it's going to decline. If it's not certain, if we get a signal, we don't have a signal yet that it's going to decline. If we get a signal, it's going to decline. We can aim at the low here, so the daily low at this area here. We can go back to the Fibonacci if we wish as well, of course. In which case, we're looking at the Dow Jones's decline. We can draw Fibonacci levels between the high here and low here. Actually, let's draw it the other way around so we can see targets. Bear with me. Where's the fit? There we go. There's the Fibonacci. So if we draw between the high and the low like this, we can see there's multiple targets. Now, the main target that a lot of short-term traders focus on is they'll focus on, for example, here, the 161.8, and they'll also focus on the 261.8. Some people also add a 200 and a 50. That's an option as well. for individuals. But I'd like to say, so far, there is no active signals within regards to that. The only thing that there is a slight signal, but it's only slight at the moment, is that we're seeing divergence on the RSI and on the stochastic oscillator. Now, that's the end of today's live analysis. If people have questions, of course, we'll answer it now. If people have something specific they wish to be answered, then of course we can answer that. Somebody says here, what's expected of the US dollar? Like I said, I can't give financial advice. I can tell you what the signals are, what the indications are. We've spoken about what news is about to be released. That's something definitely that's going to affect it is the upcoming unemployment claims for the week. Today, the US dollar is the second best performing currency, so that's also something to take into consideration. Somebody else here who says what news is about to be released. We've got three announcements for the US. We've got the Philly index. We've also got the building permits. They will create little volatility. Something that can potentially create a lot of volatility, though, is the weekly jobless claims. Somebody says, can we look at the British pound against the Japanese yen? It's actually one of the most traded currencies, ladies and gentlemen, worldwide. Um, at the moment, we've got, in terms of the longer term signals, that the price is going to increase. Um, Here we can see that we saw a decline. Current candlestick is a downward candlestick, so that's something that we need to be cautious about. Most people don't want to place a buy while the price is declining. It's understandable. What we can do though is we can draw Fibonacci on the 2 hour. So we've got, actually, I won't take that high. I'll take the most recent high, which is this here. And people can even look at the low here, in which case it's going to give you a very earlier entry point. So we can see the entry signal potentially is going to be here. Alternatively, somebody can instead use the most recent low rather than the latest low, in which case it's going to give you a slightly higher entry here. Or alternatively, somebody can wait until we get a crossover. Crossover probably most likely will happen at this line. We at first, at least, definitely need this to go above our 100 bar sentiment lines, and also we definitely want it to go above 50 on the RSI as well. That's definitely something we want to see on an 18, because at the moment it's not above. So if we go above 50, we go above the 100, and then we've got our trigger points here. That's something you can take into consideration. Somebody says, can you explain the news effect on the market, please? We've mentioned that, ladies and gentlemen. I'll quickly recap. So we got the unemployment claims. What is it? In the US, every week they'll confirm how many more people have applied for unemployment benefits. Of course, the higher the negative it is, but depends on the market conditions. At the moment, if this is higher for third consecutive week, people may get stressed and concerned because for 2 weeks it's already been very high, the highest that we have seen this year so far. So if it's for third week, that can create some difficulty, ladies and gentlemen, and some concern. The only thing which can be positive is that it can prompt the Federal Reserve to start really taking into consideration interest rate cuts. If it does, that potentially can have a positive effect on the stock market, negative effect on the US dollar. If it's not going to do that, and it's just very simply going to create a higher risk of an unbalanced employment sector or recession, then that of course has the opposite effect. Stronger demand for the US dollar, weaker demand for the US stock market. So, ladies and gentlemen, that brings us to the end of today's webinar. So let's end today's session. As always, hopefully you found it educational. Trade safe, trade responsibly. Don't forget that on our platform, you can access copy trading and you can access traders from all around the world, regardless of their trade size. So you may be copying trades from an individual who has thousands in their account, and you only have $50 in your account. You can copy trades from somebody who's a lot more experienced than you, or you can not copy trades and use it as an educational tool. Don't forget also that we have a swap-free account, so individuals are able to trade without swap fees, which is absolutely amazing. And it's not just from individuals for religious purposes cannot trade with swaps. It is available to everybody, including on some of our most traded assets, including the most traded currency pairs, and even including commodities as well. So don't forget about that. Hopefully, you found today's live analysis educational. We have more webinars, of course. We have approximately 18 webinars a week if we look at all languages. Um, but if we only look at English, we have approximately 3 to 4 every single week. Everything is always going to be based on a different topic. Some are for advanced traders, some are for beginner traders. But either way, hopefully you found today's webinar enjoyable and educational. Trade safe, trade responsibly, and have a great day. And we'll see you very soon on one of our next webinars. In the meantime, goodbye.